Arbor Realty stock, ticker symbol ABR. This stock is down almost 17% year to date, while the S&P 500 is down 12.5% year to date as of recording this video. Which is quite interesting since ABR has beaten the S&P 500 in the past 5 years by quite a margin. 209% for ABR versus 87% for the S&P 500. On top of that, people love the dividends of ABR. Right now, dividend yield is at 10%, which is insane. So is this a dividend trap? And what about the current fundamentals? Will ABR outperform the S&P 500 again in the coming years? In this video I'm going to show you real quickly what ABR does, the historical returns, the fundamental analysis, dividends, their major competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ABR do? Arbor Realty Trust is a specialized real estate finance company. It invests in a diversified portfolio of structured finance assets in the multifamily and commercial real estate markets. If we check the latest earnings, we see that ABR reports a 0.52 non-GAAP EPS with a beat of 9 cents. Revenue was at 94 million and beats the estimate by almost 12 million. Next to that, revenue went up 60% year over year. When we dive in the earnings and check the company highlights, we see that ABR also raised cash dividends to $0.39 for the 9th consecutive quarterly increase, representing a 30% increase over that time span, which is pretty impressive. With the current dividend, payout ratio is at 75%, which is pretty common for a REIT, so this comforts me a lot. The dividends are secured. When we check the structured portfolio, we see that multifamily is by far the biggest segment, representing 91% of the total revenue. SFR, or single family rental, is at only 5%. Other represents 2%. Both multifamily and SFR are increasing year over year. So multifamily homes are very important for ABR. And in this graph we see that the total amount of multifamily homes is growing big time, including a 2023 forecast. So this looks quite good for ABR. There are a lot of researchers pointing out to the fact that the demand for multifamily homes will be growing in the coming years. In this message we see that according to the National Multifamily Housing Council and the National Apartment Association, the US needs 3.7 million new units by 2035 to meet the demand. So this means that there's a lot of potential for ABR. And now that we know more about ABR, it's time to check the historical return to see what happened there. I decided to include the S&P 500 as a benchmark. And I decided to add GBS, PEB and MAC, some competitors of ABR. On the 5-year chart we see that ABR returned a 209% including dividends. The S&P 500 returned 87%, so ABR has beaten the S&P 500 by a big margin in the past 5 years, especially after the lockdown periods. All other competitors are down from minus 90 to minus 70% return. On the 1-year chart we see that ABR returned a minus 7%, while the S&P 500 returned a minus 5%. All other competitors again returned minus 9 to minus 35%. On the 6-month chart we see that ABR returned a minus 7.5%, while the S&P 500 returned a minus 3.5%, so that's a small difference. And again, all competitors did not so well, with a minus 12 to minus 34%. On the 1-month chart we see that ABR returned almost 2%, while the S&P 500 is at 6%. All other stocks underperformed ABR and the S&P 500 again. So ABR did very well compared to the S&P 500, but also compared to some competitors. But does this mean that ABR stock is a buy? Let's find out by checking the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. I also want to mention that I'm almost at 1000 subscribers, so help me achieving this huge milestone by giving me a subscribe. In return, you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. ABR is a 2.5 billion market cap company with a PE ratio of 7.24, which could indicate that this company is undervalued. On the other hand, ABR is a REIT, meaning AFFO or FFO is a better way to value this company. ABR has a FFO of $2.46 in the 12 trading months. If we divide the current stock price of 15.44 by 2.46, then we get 6.29, which means that its ABR could be undervalued. Next up is revenue. ABR has a 12 trading month revenue of $609 million, and in this graph we see that revenue didn't do much before 2016. But ever since 2016 it went up quite nice and steady. Net income sits at $346 million, which gives us a profit margin of 56.8, which is very nice, especially since it's above the 5-year average of 44%, so I definitely like that part. A thing that I don't like about ABR is the fact that debt is really high. Companies like ABR use debt to grow the business, of course, but right now debt is too high in my opinion. They have $346 million in cash while debt is at $14 billion, so that's quite a difference. So I think they should pay down their debt in the coming years. And for me it's very important that free cash flow is growing, since this is used to pay down debt, of course, buy back shares, do acquisitions and all other things. In this graph we see that free cash flow isn't really consistent, so this is also something that I really don't like about this company. But I think that most people do like are the dividends, of course. Right now ABR pays a 10% dividend yield, which is insane high and could cause some problems, of course. Annual payout is at $1.56 a share or $0.39 each quarter. Payout ratio is at 73%, which is quite alright for a REIT in general. So with the dividend yield sitting at 10%, this payout ratio looks quite good. The 5-year growth rate is at 16%, which is also very high, and I do like it when companies grow the dividend. But to be honest, I think I would be more comfortable with a 5 to 6% dividend yield and that at lower levels. So that's something to think of. Last but not least, ABR grew the dividends for 8 years in a row, which is also very nice. The next part will be about the fundamentals of ABR versus Ready Capital, ticker symbol RC, a competitor of ABR and also a stock that I do own right now. Both companies are trading for a similar PE ratio, which is very interesting, and also seem to be very low for both companies. Both companies grew their revenue for 50% year over year, but RC has a higher 3 and 5-year revenue compound annual growth rate. On top of that, RC has a higher net income compound annual growth rate, so to me, RC is the winner here. Both companies have a really high gross profit margin, but ABR has the highest net income margin, so to me, they are the winner here. Both companies also have a lot of debt compared to the current cash position, so to me, there's no winner. And the last part is about the dividends, which is the thing that most people are after with these companies. RC has a 12% dividend yield, which is insane. Payout ratio is around 75 for both companies, but ABR does have the highest growth rate, so to me, ABR is the winner here. Overall, I think these are very similar companies and both have an insane high dividend yield. So they could be interesting, of course, but be aware of the volatility when dividends will be cut or anything. The last part of this video will be about my price target for ABR using the Everything Money software, which is one of the best tools out there, so definitely check them out. We have to fill in a few key numbers, using a low, mid and high assumption, starting off with the revenue growth. I expect things to slow down a bit, even while demand is rising, just to be a bit conservative and building in a margin of safety, so I'm filling in 5, 6 and 7%. For the profit margin, it's pretty much the same story. I'm filling in 44, 48 and 52%. Free cash flow margin I'm aiming for 40, 41 and 42. PE ratio is a bit low at 7, and we saw the price to FFO is also around this number, so I'm filling in 10, 11 and 12. Same story for the price to free cash flow. For my desired annual return I'm filling in not 12.5% but 15%, since I want a higher margin of safety here. I can get an easy 10% return with owning an ETF, so that's why I'm going for 15%. Right now, ABR is at $15 a share. I hit analyze and we see some green numbers. We have a low price target of $12.8 to $14, which is quite a big drop. We have a mid price target of $14.6 to $17, which is around the current valuation, and we have a high price target of $17.6 to $20. So if you believe these numbers, ABR could be a buy. But keep in mind that this could also be a high risk, high reward company. I think the range of $16 to $20 is the most justified here. My final conclusion on the stock is that I do like the high dividends. It might be a risk, but it's very nice to collect the dividends every time and reinvest it. But I also have to say that there are some downsides with this stock. Debt is really high and the current dividend yield is also very high, which could cause some problems in the future. And I think when dividends will be cut or anything else, you have a big problem. So whenever you want to buy this stock or already own it, check the quarterly reports every time to see if things are still holding together, or that you find a potential problem. For now, I think ABR is already a big position in my portfolio, and I don't want to increase further from here. I'm collecting the dividends and value them every quarter to see if it's still a fit in my portfolio. I'm not planning to buy new shares coming soon, but I'm also not planning to sell for now. This was my opinion on ABR. I'm just going to collect the dividends for now. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.